And joining me on the podcast and on video, it's Alan Green, CEO of Brand Communications. You're Al.
I'm very good, Jess. How are you?
Yeah, I'm all right. I haven't got much of a tan from Tenerife because it
Well,
was a little bit
you
cloudy.
have from here.
Oh,
You're a
okay,
lot better
yeah.
than me,
Well,
mate.
that's makeup for the video. Yeah. But yeah, it was a bit cloudy, but it was warm. That's the main thing. It didn't rain. That's the
Yeah,
thing.
yeah.
I mean, I hate rain. I
Mm.
don't mind if it's over here. If it's like today, actually, it's a little bit cloudy, but it's not raining. That's the main thing, isn't it? So yeah, it's
Still quite
nice.
warm.
But
It's
yeah.
still a bit nippy though. The air hasn't really warmed up yet. You kind of feel that we're not quite there.
Yeah,
Should be in summer, but we're not.
yeah. I just wish they'd improve the speed of travel on planes, just so we can get there in half an hour or
Mm.
something. But because did you hear that thing actually a while back? But is it Singapore Airlines, wasn't it, from London to Singapore? That horrendous turbulence they had,
Yeah,
and
yeah,
I don't
yeah,
know if you saw that. And someone said it was due to climate change. I thought if more of that's going to happen, and if it does happen, that'll have massive implications for the travel industry and planes, hotels, everything. So I
yeah.
don't know about you, but I don't fancy going on planes that drop 6,000 feet in a couple of seconds and have people hitting the ceilings and all that stuff. That
Well, there's-
do you know, I did keep my seatbelt on. I know they said keep your seatbelt on whatever happens, unless you're in the toilet. I did keep my seatbelt on just in case.
well, the thing is, I mean, climate change. It's such an easy sort of thing to play the blame game with. But at the end of it, if you travel to tropical destinations and you're flying over hot territory, you're going to get currents of air moving upwards and air moving downwards, and
Yeah,
those anomalies have always taken place. But we've got more air traffic now than ever before, so the chances of somebody finding hitting those air pockets is greater than ever. I don't subscribe to the whole climate change thing
no.
as regards air travel. If you're flying in tropical climate, then you're going to get greater
Yeah.
movement of air. It stands to
But
reason.
also, what you just said there about the amount of travel that goes on, you're
Mm.
going to have one or two company planes that,
Yeah,
have issues with turbulence. It's like the thousands of,
it,
and we don't hear of it very often. So
it
it's,
happens all the time. It's just because yeah, this was a particularly severe episode. You now, I think about a week later, there was a flight down to South America. There was a big turbulence there, and passengers were sort of thrown around. But frankly, if as you did, you keep your seatbelt on during the flight, then you'll be okay because in the air that happens, and
yeah,
aircraft are designed to deal with that sort of turbulence. The airframes are built to withstand that.
yeah. And of course, it could have been just the pilot just falling asleep, knocking the joystick forward. And of course, he just blamed turbulence, wouldn't he? Oh, sorry, sorry,
Yeah, yeah.
turbulence. Let's blame on turbulence,
No,
everyone.
no,
Don't
that
worry.
doesn't. Well, that might have happened on the old DC3 analog airliner, but nowadays he just presses a button, autopilot's on, and it doesn't matter if he falls asleep and falls into the joystick or not. The
Yeah,
autopilot will just correct.
yeah, exactly. Okay. Let's have a quick look at AMOL share the screen. It's rolled over a little bit. It's but nevertheless, it's all right. We're gonna
It's
have that
Yeah,
after a big rally. It's gonna roll over a bit. It's
it's
come
never
off.
going to go up in a straight line.
No, exactly. So they may have to go sideways a little bit.
Yeah.
Maybe around this 785 level, all that. But the markets are not, particularly. In fact, the markets are pretty much all down today. I mean, all this stock
Mm.
exchange. I think that. Oh, hang on. That's the rise. Oh, there we are on this side, left
Yeah,
here.
yeah, yeah.
Quarter 1% for FTSE, 250 is 0.34%. FTSE and AIM is down 0.5%, pretty
Mm.
much. But Hargreaves Land is down, rallying nicely there. Red to kill down, biggest fall of there. But yeah, I think we've had this sort of like the ECB last week, didn't we? Reduced interest rates first time. Was it like 5 years? No, first time in 3 years, 2 years. I don't know what it was,
Yeah, yeah,
but a
yeah,
quarter
yeah,
1%.
yeah, yeah.
And so I think with the Bank of England and the Fed are behind, but it's going to happen. Maybe one this year, maybe two. Who knows? But it's going to happen, and that'll help the markets a lot.
It's
So
going to happen. The market's going to stabilize. We're going to go back to sort of closer to where we were beforehand because we had this unprecedented period of zero interest rates, and now
yeah,
we're paying interest on money borrowed, and that's how it should be. So,
yeah, and
but
it's never going to get back to
as you can see
and
there,
yeah. Look at
Uh,
that. But that was an unprecedented time.
yeah,
The length that interest rates were zero. It never happened before. Never been that long where
no,
it's been
no,
zero. And so you had a lot of stocks that are pre-revenue, loss-making stocks rallied like hell because raising money wasn't an issue because there was nowhere else to put your money apart from the market. I think
yeah,
it's going to change. I think the new normal will come where I don't know, interest rates will be at what 2.5, 3% maybe, but I don't think it'll ever go down to unless major problems. But I can't see it ever going back to where it was.
no,
That
no.
10 years. It's almost like the central banks fuel this boom and bust. They ratchet up interest rates now. And largely that was down to inflation and also money printing, which is down to them. They reduce it, they go from one extreme to another. It's really sensible, measured, custodians of our system, financial system. But they seem to go from one extreme to the other. And I think even
Mm.
now, they should start a quarter of 1%, bringing it down a little bit. We all know it's lagged, the effects of what they do,
Yeah,
their
yeah, yeah,
policies.
yeah.
So if anything now, they shouldn't just keep it higher for longer and wait until they see something happen because we know the system is lagged. It'll take a while for this to wash through. So even now, I think they should be thinking about, bring it down a quarter of 1%, see what happens. Because it's almost as if once they start in one direction, they don't seem to stop. So I just don't know. It seems a bit extreme considering they are supposed to be, sensible custodians of our financial system. They don't seem to be. Seem like
Well,
inflation itself is a bit self-correcting anyway. You get inflation, people spend less.
I think I think the custodians, they've overseen a boom and bust scenario in the past, and I think they're anxious to avoid that at all costs. So, if anything, they're probably being overly cautious, and that in itself isn't a bad thing because by the time the rates do come down, then the economy is more than ready and able to cope with it, and that's important. We want to see careful management and prudent management, and you know, possibly some people in government might say, oh, those interest rates should be coming down now in order to win votes. Well, no, let's bring them down at the right time. The Bank of England did say they anticipated rates dropping this year. So we're only in June. We've got a long way to go. So a couple of rate falls by the end of the year, I think would do fine.
Okay, stocks out. What are you looking at?
Okay, we're talking about license to print money. Want to talk about Ramsdens Holdings first of all?
Oh, I like
RFX
Ramsdens.
code?
I
Yeah.
covered these in the webinar last week because they're interim. For transparency, I own a little bit of stock in this, not a lot,
Hmm.
not at all, but I do like them. And and it's an area of the market. I think, in fact, let's go with it. They're one of these companies on my microcap league that score highly in every metric. Okay, apart from momentum. That means the chart. Now, if you look at, I think there's a video coming out on this in the next few days from my webinar. But there's a little seller in there, and that's the only thing holding it back. Everything else is fine. Dividend, nice dividend, a good area of the market, very well diversified. Anyway, crack on, Al. Sorry.
I think it's I think the seller is Close Brothers, if I am correct. There was a
Yeah.
TR1 recently where they reduced their holding slightly, but as can be seen, I mean, this company started in 2001 with just 3 stores. Peter Kenyon, of course, the CEO, has been there pretty much since the outset. The company grew via acquisition. The business was primarily driven by gold buying. So, of course, people would go and sell their gold. The company would then make a profit on that gold. All the way through to 2013, where the company has 120 stores. And then, of course, gold crashed. There was that big crash in 2013. And what that did, it triggered diversification in the company. And of course, the company came to market in 2016. So it's been on name now for 7 years. It now offers 4 key revenue generators. It has a foreign exchange business, pawnbroking loan business. It continues to buy precious metals, and it's now has a large chain of secondhand and new jewelry stores. And it's a big cash generator. This company, it really is. And we had a very strong set of interim results, which were published last week from the company. Pre-tax or profit before tax up 8% to 4 million quid. Revenues up 12% to 43.8 million quid. And really strong performance. And this is a company with a market capitalization of just 64 million. So there's very little premium in there really for growth. Across the business, the jewellery retail was steady, rose 1% to 17.5 million. Pawnbroking loan book grew by 12% to just under 11 million. 3% gain on Forex to 5 million. But the gross profit on precious metal purchases rose by 25% also to 5 million. Obviously a lot to do with the metals prices that we've seen over this period. But the group are really
And I can't
confident.
see that coming down. Do you know what? Gold price, by the way,
Mm,
with interest rates, like you say, coming down,
yeah,
gold is likely to rally. So this is a
it
strong
is.
part of their business. And
Yeah.
you tend to get, like I said, you see all these adverts new for "we'll buy your gold" when the gold price is high, and people do respond. They look around the house for old jewelry they don't wear, and they take them in and sell them. And so I think for a long time this can be a buoyant part of the. What I quite like that is it's diversified. So you got
Mm,
the gold selling and the pawnbroking pretty much is
yeah.
almost for tough times. But also, you've got the other side of it where people are, buying secondhand jewelry and watches and all this stuff as well for good times. So, and foreign
Mm.
exchange for good times. So
And a
it's
foreign
nice, really
exchange business.
diversified.
So theoretically, overseas buyers can come to the store and
Mm.
they can sell their jewelry and perhaps receive the money back through the foreign exchange business in euros or whatever they want. So there are many ways for this company to make money, and they are really corning it in. Certainly, they're corning in enough to continue to grow the business. During the period, 6 new stores in Poole, Romford, Burnley, Blackburn, Cardiff, and a franchise store in Bury. They've now got 167 stores around the country. That's a big business to support. Also, the current period, second half of the year, is trading in line. They're going to be opening another new store up in Telford, and also launching to further drive the online business, a dedicated pawnbroking and gold buying website. So those will be out in the coming months. So it's a really, really strong business model. I think Peter Kenyon and his team have done a great job here.
Yeah.
So I'm guessing, where do they go from here? Perhaps they look overseas. Who knows?
Well, no, well, do you know what? If you look at the footprint, they're largely. I mean, there's a bigger player in the market. There's more pawnbroking there. It's not as
Mm,
diversified as there's H&T, but they're more down the south. Now,
yeah.
Ramsdens are sort of north. They're creeping down slowly. They cross. They're in Wales as well, but they are buying stores now in the south. So they are. I quite like they are. Playing in H&T's backyard. I think. Do you know what? I think H&T could probably take these out if they become too much of a threat. Because what I
Yeah.
like about
Yeah.
this,
Yeah.
like I said,
Yeah.
we often talk about AIM companies, and AIM gets a bad name for companies that are, just generally loss-making
Mm,
resource companies just raise money constantly, and the people overlook good businesses. And this is a good business. It's generating cash. It's paying a 5.2% dividend. They just increased the interim dividend by 9%, and it's one of those things that literally they know exactly. I've listened to Peter, an interview with Peter, and he's a big shareholder, CEO, and he said there's about around 300 over 300 about 360 330 towns that'll support them, size towns with a good sort of little town centres and all that. They'll support them. There are 167 stores right now. So almost doubling their footprint. They can do that. And what I like is they've been doing this for a while now. They know exactly where it'll work, won't work.
yeah.
It's almost like that cliched, cookie cutter operation. As long as they've got the right location, and they take the time over it.
Mm,
There was
mm.
one location they mentioned recently. They're waiting for 18 months. They knew exactly where they wanted one in a store, and they waited 18 months and they got it in the end. And so he
Yeah.
says,
Yeah. Yeah.
eventually you get the
Yeah.
right locations. But he says there are 330 around that, the viable locations in the UK. And
Mm,
so these stores are pretty much profitable after in year 2, year 3.
yeah.
And I just think it's nice. It'll never knock the lights out. You never see it shoot up overnight. But it's one of those companies that, 5% dividend a year. And
It's
I
a
think the
cash
share
cow.
price will slowly creep up over the years. And before you know it, in 2, 3 years down the line, you're almost 100% up probably, plus dividends and all that stuff. Or maybe 4 or 5 years, 100% up. And it's one of those ones that has a lovely, great business on AIM that's almost overlooked by people who, tar him with the brush from, oh, it's all rubbish companies. This is a cracking bit. Like I said, if you look at that, total scores on, everything is in the green apart from momentum. And if you
Mm,
look at the chart, it's had this it rose up here towards the full year results last year, and then came back down, and now we are seeing you see a series of lower highs, a series
yeah.
of lower lows. Now though we're getting a higher low, which starts first before a higher high kicks in. So I
Hmm.
think if it clears this £2.7, £2.10 area, I think it's back into an uptrend, and that means probably the seller, is going to be cleared. And sometimes
Well,
when
I
you get
think
an
the
institutional
sellers,
seller,
I think the
it's
seller's an institution, so that's
yeah.
fine, and that's just normal churn. I don't think there's any
Yeah,
ulterior
yeah, and
motives
I see that
behind
as
that.
an
So
opportunity because they're
yeah,
suppressing the price.
mm,
Once they stop selling, it'll pop.
it
So
will, it will. Yeah,
yeah, it's
yeah.
a great little business, I think. So
Yeah, no, indeed,
no,
and also you mentioned the dividend there. Just of course, the dividend rose. They grew the dividend by
9%
nine
interim, didn't
percent
it? Yeah,
to 3.6p on the interim period. So it's a really strong company and a real
yeah,
cash cow of a company too. And this is the sort of business, the sort of cash generative business that makes a great investment over the medium to longer term, and will certainly beat inflation.
yeah, yeah. What I hold, that's what I like. No, I like because I hold. What do I hold because I like? I don't know. No, I hold them because I like them.
You like to
Um,
hold, just yeah, yeah.
yeah.
Well,
So I'm not saying that I
understood.
like them, just go hold them. But the reason why I bought them is I like that. So it was one of these great little businesses, a cracking little business, cash generative, and it said, and they can keep plodding on nicely for years, opening these stores and doing what they do very well.
Hmm.
But yeah. Anyway, what's next, Al?
Okay. We spoke a few weeks back about Brave Bison. Fantastic name for a company.
Okay, yeah,
I love this.
yeah.
So the Brave Bison, but Brave Bison, as viewers will know, have been on a mission, or rather, they've been trying to acquire
Oh, I
mission.
like that. Yes, very good, Al. Very good.
You
Very
see
good.
you see what I did there, yeah, yeah,
Yeah,
yeah.
just about. Yeah.
Yeah, okay. So Brave Bison are a digital advertising technology services company. The business really changed a few years ago when they bought Social Chain, a company that creates content for social media platforms. They also work with influencers to drive the business. So if you go to them and you have a brand, they have a complete A to Z series of tools that will drive your business online. They have the performance arm which plans and buys media across platforms like Google, TikTok, and so on. Social Chain I've already mentioned. Brave Bison Commerce, which builds the platforms to help companies generate the cash from their investments, and then of course also the Brave Bison Media Network, where they have their own portfolio of channels across YouTube, Facebook, Snapchat, TikTok, Instagram, and others, with well over 1 billion monthly users. So go back to the last set of results. We saw a very strong performance announced earlier this year. Turnover up 13% to 36 million. Net revenues, gross profits up 23% to 21 million. EBITDA up 42% to 4.3 million, and net cash also up 10% to just under 7 million. Very strong trading in the current year. So the next trading update, I'm sure, will be more of the same. Then, of course, in May this year, they put an offer in for Mission Group.
Mm.
Now, Brave Bison has no debt. It has cash of just under 7 million. Mission Group, on the other hand, has 30 million of debt. And it sees potential with an enlarged group putting the companies together to create revenues of well in excess of 130, 140 million a year. And of course, it also said at the time it made the offer that it believed the mission levels of debt were unsustainable given the amount of business the company is currently writing. One of Mission's major shareholders, DBay, said the offer was very unattractive, but since then they have sold down a little bit, so that might tell you something. Michael Ashcroft also increased his shareholding in Brave Bison at the time from 20% to 23.7%, which also tells its own story. But as we know, Mission Group have rejected the offer outright. Brave Bison then put in an improved offer, which equated. I mean, if we look at Mission Group at the moment, shares are trading at 25p. They've come back down since Mission
Net
rejected the
debt. I
offer.
know.
So they have all this debt. They had an offer of 35 pence per share, which I think as a management team, you could turn around and say, okay, well, this is good. We see potential there are synergies with the product offerings from both companies that can deliver exponential growth. There's a real opportunity here. But of course, I think I actually think this is just a matter of pride. And I think Mission Group didn't like being approached with an unsolicited offer. Perhaps if conversations had gone on behind the scenes, then they could have announced it together. But of course, that didn't happen. So maybe Brave Bison needs to rethink that. But the Brave Bison said it's disappointed, it's walking away because the management at Mission Group have chosen not to engage with them. They've chosen not to provide any details of management accounts or anything at all. So they've walked away. I don't think the story's over though. Something tells me that the economies of scale this would generate, the synergies between the two are worth re-examining. And I'm sure Mission Group shareholders may well be speaking with the board, perhaps even calling an EGM to discuss this further. So watch this space. We often see with M&A activity like this that there's the initial flurry, if you like, of activity, the initial bombardment, and then everything settles down, and perhaps there's a phony war period, and then everything else starts getting in earnest. So I wouldn't be surprised to see this little episode reignite.
Do you know what? If I was a Brave Bison, I'd count myself lucky. I'd walk away from that. Net debt of 24 million is like nuts.
Yeah,
if
yeah,
I was
yeah.
Mission Group, if I was Mission Group, I'd bite their hand off.
Well, exactly.
I don't see how they're going to get out of that hole.
And I think this is a pride issue. I think management have just said, "How dare they? How dare they make an unsolicited approach to our company? This is shocking. We can't have this." And they've just refused to engage, which is nuts.
The net debt is equal to their market cap. And literally, I don't see how they're going to get out of the hole, because if you look at the interim statement, the interims, the amount they're paying on that debt is ridiculous. It's turning over 41. Okay, it's 11%. But the reported profit is 100 grand after paying off all. It's just ridiculous. I think they should bite Brave Bison's paw off.
Well, I think you've got to give the Brave Bison guys some credit, because they've delivered us a really stonking performance over the past year. Certainly the last set of results, they've grown the net cash that the company has. So if it just carries on doing what it's doing, it's going to be in a stronger position, have a bigger war chest, and so on. So maybe it can go back with another improved offer. But they obviously saw something at Mission Group. Perhaps it was just the clients. Perhaps it was a particular product set.
I can't see what they saw in it. I don't know. I'd be worried about Brave Bison taking on that much debt. I'm surprised the share price hasn't gone up today, because I think it's a lot of debt to take on that.
Well, exactly, and that's what tells me this isn't over. Because I think if it had been, if the coup de grace had been delivered, then perhaps we would have seen the share price ping back up, and perhaps a trading statement from Brave Bison just to reassure shareholders. Yep, okay, that episode's now over, but hey, we're having a really good time here. Full trading statement will be issued shortly, but happy to say that we are trading in line with our expectations. Something like that would have been good. That hasn't happened, so who knows? But the group had a plan. They went in with a plan. They saw an opportunity. They saw an opportunity to create synergies, to create growth, to create a much bigger business. And when you've got that sort of resource, Mission Group's got offices around the world. When you've got an opportunity to put all those resources together, then you can often accelerate growth. And that was the plan. And who knows? It may still happen.
Yeah, I think maybe with the cost of debt maybe coming down in the future, maybe they see it that way as well. The cost of servicing that debt will become less expensive. But okay, all right. What's next now?
Okay, well, we're going to talk about a mining and resource stock now, which I've covered sort of a number of times previously. This is a company called Blencowe Resources. BRES is the EPIC code. This company is London listed. It was a reverse takeover a few years ago, where African Consolidated Resources reversed into a shell. And the company 100% owns the Oran Cross Graphite project in Uganda. And I've been sort of keeping a close eye on the company all the way through its inception. They discovered large flake graphite. They have a huge license area, some 2,000 hectares. It's a big old area. and they discovered high-grade graphite on an area that I think is about 1% of the total license area. So there's real opportunity to upscale this. Fast forward a couple of years, and the company have secured a loan from the US government, a non-dilutive loan, $5 million loan, which they're receiving through in tranches. And this is to develop the project, to test the product. They have been in China. Mike Ralston and his team have been in China testing the product, testing whether it's up to spec for batteries, whether it's the spherical graphite is up to spec to be used for all the different applications, and it's passed the tests with flying colours. The company is also well funded. It raised 400,000 at 5p back in February, and a further 2.5 million from a strategic investor based in Africa. So the company is well funded, has no need of funding, and as I say, it also has this development loan from the US DFC, and it's receiving this money through. Fast forward through to today, I interviewed Mike Ralston. That interview was released this morning, and the company have announced their first offtake agreement with Jilin, the Chinese company Jilin, to basically purchase many tons of flake graphite per annum. In the commentary, the executive chairman Cameron Pearce said that this is the first of many, and I think we can expect a series of offtake agreements to be announced in the coming months. In the interview with Mike, we also discuss what's happening with the actual plant. They're constructing a pilot plant at Orham Cross, and that pilot plant they expect to be operating probably about a year and a half from now, so probably early 2026. But from where they come from, and I think you can see in the series of events that have unfolded to date, this is how a mine should be developed, how it should be brought to market, how a mining company evolves from a tiny explorer into a company that's producing a graphite project, which will obviously be selling all over the world in the future. So a real landmark achievement for the company today. Shares currently trading at 5.7p. They're only up 3% on the news. I think given the time they spent in China, the Jilin offtake agreement wasn't entirely a surprise. But I think we're going to see a lot more movement in the coming months when we hear about these further offtake agreements and, of course, construction of the plant. I will declare an interest here. I'm a shareholder in Blencowe. It's certainly a very steady performer, not a spectacular performer, but we've seen a decent move in the share price. The shares were trading back around 3.9p in March, and we're back up to 5.7p now. So expecting it to progress from here steadily, I would imagine. But the company has a market cap of just 12.4 million. So very modest, I think, considering where the company is, and also the fact that it has these strategic partners in place, both the offtake partners and also, of course, the grant funding from the US International Development Finance Corporation.
Very nice chart there. You need to close above that. Well, 6 pence really. If you can close above that, it's a good sign. It's not done that for a few. Well, since early May, it closed there at 6 pence. But if it closes above that, that'd be a good sign. Marvelous. Yeah, it's almost EVs at the moment. I mean, they of course in practice they haven't gone off the ball because it's only going one way.
Yeah.
But you do see a lot of negative press towards them, or people say they're not buying them anymore. And stuff. But I think they'll back. I think it didn't help that Rishi Sunak pushed out the date at which you need to change your car to 20. Well, was it 2035, wasn't it? And so from 2030. So because you know what, on a personal level, we're going to buy an EV, and then they pushed that date out, and we didn't.
Yeah,
because we've got plenty of time now.
Well, on a personal level, we own an electric Skoda Enyaq, and it's fantastic. It's a great car. It's better range at this time of year. If it's about 18 degrees, that's the optimum temperature. About range of about 260 miles, I guess. But really lovely car. Just plug and play. It's so efficient, and we have I have a Hive app on my phone. We have a charger at the house, so I can see, we'll plug it in on smart charge. So charge the car up. It's about 13 quid. Smart charge at night. So, they're very cheap to run. Yeah, the initial purchase cost is high, and I'm guessing we're going to see depreciation at the outset. But I think we're seeing the next iteration of vehicles coming through now. We're seeing vehicles with longer range and batteries that will last for longer. And I think eventually we're going to get to a stage where you'll quickly recharge your battery and you'll be able to drive for 500 miles. And at that point, that's what EV technology should be delivering. Because that really, I think, that then just provides an unassailable argument to own an EV.
Yeah, but I think that BYD, these Chinese producers, they bring the cost down. And people will mind it. People don't want to spend. As I say, people would like to be able to afford maybe a second car that's an EV. That's the runaround, because I think it's like 90% of the journeys are less than 5 miles. So that's fine. But it's having to spend like 50 grand on a car that can't take you to the long journeys. So for a second car, it's perfect, isn't it? Because you don't do big journeys. It's simple as that. Most of them aren't. So,
Well, I
I
think
think
there's some
once
very
the price goes down, people will buy them more.
there was a very attractive offers, for companies considering buying EVs and all the rest of it. So the tax structures are attractive. You get good benefit in kind back. As a director or an employee. So there are some good perks to owning a vehicle, and I think I mean I'm still, as you know, I'm a petrol head. I love my motorbikes and all the rest of it, and we've got an old diesel Audi, which is a great car, and it'll do 600 miles on a tank. And if we're traveling anywhere, that's the one we'll use. But for everyday stuff, when you're just jumping in and out of the car, of course, you don't have to wait for you don't wait for the engine to warm up anyway in a modern vehicle. But you just jump straight in, you drive it, and if you're sitting in traffic, of course, the engine's not moving, so you're not using electricity. It's
Yeah, but the thing is, what? Owning that Audi, as long as it's environmentally friendly and so it's been tested and that stuff, the best thing you can do for the environment is not to change a car. Because when you buy a new car, there's so much, energy goes into that. There's so much emissions go into creating a car. The most environmental thing you can do is actually keep your car. Rather than all the plastics get made. So they don't tell you that, but as long as your car is not, coughing out lots of dirt and muck and all that. So it's well, in fact, just one car is not a problem. But they said the worst thing to do is renewing stuff all the time. Buying new stuff all the time. That's the worst thing for the planet. So I applaud you. I'll keep that Audi. How old is the Audi?
Oh, well, the Audi's 2008. It's a very old one. It's done 160,000 miles. It's a big V6 3-litre diesel, and it doesn't use a drop of oil. It's a fantastic engine. So I've had it for years, and I'm going to keep on. I'm going to keep owning it for years because it does everything I want. What's the point?
Yeah, exactly. On bikes, quickly. Have you looked at any electric bikes or anything like that, or don't fancy that?
That's an interesting point. I haven't yet. I mean, there are some. There is actually. I think going back to the point about the way we use cars, just to run down to the shops. There's a British company called Maving, Maevving, that produces what I think is a really nice looking electric motorcycle. It's got a range of about 45 miles or 80 miles. It's designed for city use, but it's actually a really stylish little bike. So if I lived in a city, that's what I get. It would be a no-brainer. Or I guess I should get a push bike really because it's better for keeping fit. But so there are some really good bikes on the market now, some innovative bikes, and that sector is growing. And also you have I've been watching the Isle of Man TT last week, some fantastic racing there. And of course you have the TT Zero, which is the electric race and all the rest of it. So electric bikes very much coming to the fore, but they're probably behind the curve in a sense compared to electric cars. But they will be here. They're all part and parcel of it.
Oh yeah, it's impending. It's coming. It's like a wave. It'll get bigger. Marvelous stuff. Thanks, Al. Speak to you next week.
Cheers, Just. Been listening.